If you're an active trader or investor, I'm sure you're no stranger to ITC memes. From tragic Karan Arjun visuals, ITC has upgraded itself to heroic Rajnikant memes. Such has been the upward trajectory, not just of social media conversations, but also the stock price of ITC. Shares of ITC have gained more than 16% in March 2022, the most amount of gain it's seen in the last 16 months at a time when its peers' stocks were dropping. Look at a Hindustan Unilever, which has lost 6% during this period. Other peers such as Britannia, Nestle, Dabur and even Marico, they've all lost in March. Analysts say the fall in most FMCG stocks is happening because of rising raw material prices that have gained ground on the back of Russia-Ukraine conflict. Over the last quarter, prices of various commodities like palm oil, crude oil and even skimmed milk powder are up anywhere between 23 to 40%. Crude-linked derivatives, which are currently seeing a single-digit inflation, are all set to catch up as well, with a lag of another 2 to 3 months. So how did ITC outperform its peers and the broader market amid all this volatility? Simply put, ITC offers the best inflation hedge, and that's because its core business is completely immune to inflation risk. Analysts say ITC is relatively insulated as it has other verticals such as hotels and cigarettes, which cushion the blow to its FMCG segment from the sharp rise in input costs. Another reason is that ITC is expected to be least affected by rural slowdown as its portfolio mainly has food products. The answer also lies in the performance of its businesses. Let's take a closer look. ITC is one of the largest consumer companies in India, with businesses spanning across categories, whether it's cigarettes, hotels, paper and agri-commodities. Its branded foods division, with products like staples, confectionery, noodles, snacks and biscuits, is well performing and gaining strong market share across several categories. In the cigarette business, analysts say legal cigarette players gain market share from illegal players, which make up for almost 1/4 of the market, as no tax hike was announced for the second consecutive year. ITC's agri-commodity businesses are likely to benefit from wheat exports because of the Ukraine crisis. Now, Russia and Ukraine are estimated to account for about 30% of global exports. If the Indian wheat crop is good, regulators have a conducive policy and India's food inflation does not become a big challenge. ITC's hotel sector business is all set to see strong recovery in FY23 after a continued fall in COVID cases, and add to that the recent resumption of international flights in India. ITC's paper business is likely to gain post-reopening of offices, educational institutions and courts. This has led to regularization of demand, sales volume coupled with higher realization. And remember, this was despite a sharp increase in major input costs in the recent period. Remember, we also saw a sharp surge in paper company stocks as well recently. Now, analysts expect ITC to be least affected by the rural slowdown as its portfolio comprises mainly foods. The company offers the best inflation hedge as its core business is completely immune to inflation risk, like I flagged off at the beginning. With volume growth back in the cigarette business and tailwinds elsewhere, ITC may offer earnings surprises in FY23.